it must have been about a month ago. What are we in April? So about 2 months ago now, we went through the 13F filings, which is kind of the quarterly disclosure of institutional investors and what they've been buying in the last quarter. But we also get these Form 4 SEC filings, which are not quarterly filings. They're actually filings for a very specific reason that also give us some deeper insight into some of the stock purchases by big institutional investors like Berkshire Hathaway. So, and we got one of these. We got a couple of Form 4 filings on the 28th of March. And basically a Form 4 SEC filing is a statement of changes in beneficial ownership. And it actually just applies to insiders of a particular company. So whenever a director or say a CEO or the CFO trades shares in the company that they work at, they have to report within 2 days that trade to the SEC by doing a Form 4. But the Form 4 also includes shareholders who own more than 10% of a company.
Right.
And so that's how we're able to see these kind of trades from Berkshire. Berkshire owns more than 10% of the company in question, which is Liberty Media Corporation.
And this is one of the reasons why Warren Buffett doesn't like to typically go above a 10% holding, right? It's because, he doesn't want to have to show up every couple of days and, say, oh, Berkshire Hathaway sold a few shares here, bought a few shares there. I think the admin task just gets a lot higher, which he doesn't really like, among other things. There's other, I think there's, I can't remember exactly what it is with banks as well. There's a whole lot more regulatory stuff with banks. If you start buying too many banks, I can't remember what it is though, Hamish. That's okay.
Yeah.
He doesn't like to go over 10% holding.
Yeah, there's some. Yeah, there are some restrictions around banks in kind of like how many banks you can own and percentages and that sort of thing.
You become like a bank holding company or something like that. And there's extra regulations that you have to follow. So, long story short, Buffett generally keeps his positions under 10% of the companies that he invests in.
Yeah, exactly right. And but in this case, we get to see basically in real time the trades that he's been making with Liberty Media Corporation because he owns more than 10% of the company. And so there was a number of filings, and I'll talk about the total amount that he's kind of invested into this company as of now. But the latest filing on the 28th of March, there was 2 filings. One was 2.5 million share purchase of Series A Liberty SiriusXM. It's a bit of a mouthful of a share name. And then the other filing showed a 7.6 million share purchase of Series C Liberty SiriusXM. So kind of Class A and Class C versions of this particular share. And as I mentioned, this is kind of just the latest of a number of very large investments he's made into Liberty Media and just specifically into the Liberty SiriusXM shares. He added 30 million shares in March, which is about $770 million. And that's on top of a pretty large position that they already had. So in total, they now have 98 million shares of Liberty SiriusXM, whether it's Class A or Class B. Which is worth about $2.7 billion. If you look at like something like Data Roma, both of these are very far down in the list because they're kind of separated into Class A and Class C. But if you combine them together, it's actually about the 10th or the 11th biggest position for Berkshire. So it's actually kind of up there in terms of positions now, especially with this last month of adding about 50% to the size of the investment, almost $1 billion invested.
Yeah, interesting. So what's this all about? I've heard whispers of what Buffett's trying to do here, but I haven't actually looked into this properly. So I'm hoping that you can give me the full rundown.
Yeah, and to kind of understand what exactly he's trying to do, because this is not a typical investment, as I'll kind of get into. It's another one of these kind of risky arbitrage, stock market plays like he did with Microsoft and Activision, where it looks like he's kind of trading the price difference between during some kind of merger. But to really understand it, and I'm putting together a video on this because it is kind of hard to understand, but Liberty Media, the company, has a very, very strange structure. Basically, there's no Liberty Media stock that just trades on the market. Instead, there's what they have is called tracking shares that kind of track each of the divisions within Liberty Media. So Liberty Media has 3 kind of key businesses. They have the SiriusXM division, which is what we're talking about today. They have the Formula One division, and then they have Liberty Live. So they have kind of these 3 divisions within the business. And as I said, you can't invest in Liberty Media shares specifically, but you can invest in tracking shares for each of these. So it could be like Liberty SiriusXM or Liberty Formula One. And you're actually just tracking the performance of that particular division.
Right.
And if that wasn't complicated enough, each of the divisions also have 3 classes of shares. They have A shares, which have 1 vote each. So these are all just kind of voting classes. One share of voting for A shares. B shares have 10 votes, and C shares have 0. So there's actually 9 different shares that you can buy for Liberty Media.
Oh my gosh.
Which is, I think, one of the strangest structures that I've ever kind of seen.
That's flipping bonkers, Hamish.
It's very bizarre. So, just to make it super clear, if you wanted to invest in basically the Liberty Media company, you would have to buy 3 different shares. You would have to buy each of the division tracking shares, and then collectively you basically are tracking the entire business, if that makes sense. So that's kind of the first confusing part of this trade. It's like
easy, mate.
Yes,
easy.
Step 1. Okay, so hopefully we've still got everybody. Okay, so Berkshire is specifically loading up on Liberty SiriusXM. So this is kind of one of the divisions. And that division, it's not really a business per se. It actually just owns one thing. And the thing that it owns is 84% of the SiriusXM shares. So it owns 84% of another company. So you're buying a tracking share that's a division of Liberty Media, and that Liberty Media division is basically just a holding company for stock in another public company.
Oh my gosh.
So this is maybe one of the strangest stock situations I've looked at in quite some time.
Yeah, I remember, because you can buy shares in SiriusXM Holdings.
It's a public company. So SiriusXM is a public company. It's a radio broadcast company. They own Pandora, which is the kind of music streaming platform similar to Spotify. It's kind of like a smaller version of Spotify. It's not as successful. But yeah, you're right. SiriusXM is a public company, but 84% of the shares of that public company are owned by Liberty Media.
And they just sit on those shares.
They do. So all of this is to say, if you're not kind of following, all of this is to say that essentially Berkshire is essentially buying ownership interest in SiriusXM, but they're doing it through Liberty instead of buying them directly from just the SiriusXM shares. And they've been buying a lot. Berkshire owns 30% of the Liberty Sirius shares, which, because they equate for 84% of the Sirius shares, essentially means that Berkshire has a 25% ownership interest in SiriusXM.
So they have 30% of the 84%,
correct,
which equals 25%.
Correct.
All right, yeah, got it.
So yeah, I thought this was a fascinating kind of situation to look at, which is why I put together a video on it, because it's incredibly confusing, and I think it can be unclear why exactly Buffett is kind of doing all of this. But to understand why, essentially this all kind of comes back to something that happened in September of last year, which was that Liberty SiriusXM announced that they want to merge with SiriusXM. Right? So you've got basically Liberty SiriusXM and SiriusXM. Both of them represent ownership in the same business, right? They're 2 shares that you can buy ownership in SiriusXM, essentially. So why not combine the listings, right? That's basically the argument. Why not just merge them so that there's one share? If you want to own a piece of SiriusXM, if you want to own a piece of this radio company, you can just buy one share. There's not kind of 2 places you could, or 2 options to buy the stock. And this merger essentially opens up a risky arbitrage situation, like all mergers or acquisitions sometimes do, right? So again, both both of these kind of two shares, Liberty and SiriusXM, both of them represent ownership in the same company. But the Liberty shares are actually a little bit cheaper. So SiriusXM has a market cap of $13.6 billion. So you can kind of think of that as the price per se of the entire business, $13.6 billion. The Liberty shares actually value the company, after you take into account that it's, only 84% of the shares, actually values the company at $10.6 billion. Which essentially means that if you're buying Liberty shares, you're buying an investment into SiriusXM at a pretty substantial discount to the actual SiriusXM shares. To be specific, the difference is 29%.
Right.
And so this is confusing, but essentially, if the merger is approved, the gap in value will close, because there will be two shares that are listed at kind of two different prices that are going to be merged into one price. So the gap is going to close. And so people who want to trade this kind of thing will often, in this specific case, you might buy the Liberty shares and then short sell the SiriusXM shares to benefit from that gap, which is going to close. And so that seems to be what Berkshire Hathaway is doing. At the very least, we know that Berkshire, as I said, has 30% of the Liberty SiriusXM shares. So they are loaded up on Liberty SiriusXM. We, of course, don't know if they're short selling SiriusXM shares because we don't get to see if they're short selling. It's entirely possible that they're not short selling and they're just hoping that the Liberty shares will essentially rise to the value of the SiriusXM shares.
Do we know how the companies, how do the companies actually merge together? Do you know?
Yeah, so essentially of the new share that will be created, there'll be a new share that's created.
So it's going to be new, okay?
There's going to be a brand new share.
It's not an acquisition, I guess.
Yeah, and 84% of the shares will be allocated to Liberty SiriusXM.
Okay.
So essentially it's going to be allocated to the exact proportions of how the shares are currently controlled. What we don't know, of course, is where the new share price sits at the end of the day, right? Will it stay? Will the new share be $13.6 billion in market cap? Will it be where the SiriusXM shares are today? And in that case, Liberty shareholders will benefit from about a 30% rise in the value of their shares. Or will it fall, or will it be in the middle somewhere? And that's why...
So I was just going to say, so if you take on balance, because the Liberty share holds 84% of the SiriusXM, you'd probably back the new valuation to be closer to that, because there's a much bigger pool. There's like an 84% pool of shares at what was it, a $10.6 billion market cap, leaving only 16% at 13.6. Is that how to kind of view it, or is that wrong?
You could say that, but there also are obviously disadvantages to owning the Liberty shares. You're not getting direct ownership control in Sirius. You don't have any voting shares on Sirius, essentially, right? And because of the strange structure of Liberty Media, you don't even really have any power really in regards to Sirius at all. So it's obviously owning through Liberty. You've got this kind of indirect ownership. You're not getting dividends directly, right? Like Liberty Media, for example, collects all the dividends from Sirius and then can decide whether they actually distribute it to Liberty shareholders. So there's kind of a disconnect, obviously, if you own through the Liberty shares. And so you could make the argument that the direct Sirius shares should be closer to the actual value of Sirius, and that the discount that Liberty has reflects the fact that you're not getting full ownership. Well, there's kind of some limitations to the ownership. You can make that argument.
Like one step removed kind of thing.
But generally, if you're doing this kind of trade, because you don't know, as you said, like you made a good argument as well, you don't know which way the gap's going to close. So you would buy the cheaper one and short sell the higher one. And that way, regardless of which way it closes, it will close, if the merger goes through, of course.
It's going to land somewhere in the middle.
Yeah, regardless of where it closes, you win. You benefit from the full gap. The only way you would lose is if the merger doesn't happen, and then of course, who knows what happens with the shares.
Right. Yep.
So generally, you would you would short sell the higher one. We know Buffett doesn't really like short selling, so I don't know if they are short selling. We can't tell unless he decides to tell us. And we also don't even know if it is Buffett in Berkshire Hathaway doing this trade. That's the other thing. It could be Ted and Todd, and they might have different rules around whether they're willing to short sell for this kind of trade.
Yeah. How interesting is that, Hamish? Thank you for doing the digging on that, because that is flippin' bonkers.
Yeah, I spent quite a long time putting together a spreadsheet of all the transactions and trying to understand the ownership, because it is very complex. I'm
looking forward to your video on it.
Yeah, I'm looking forward to putting it out as well. I think it should be out by the time this goes out, by the way.
Okay.
If you want a bit more of a visual representation of the ridiculous thing that I just described.
Hard to fully grasp over audio, granted.
Yes.
But I think we did a good job. I think you did a good job.
Yeah.
You made it make sense to me.
Okay, yeah.
So
CDO A
so
owns
well
bits
done.
of CDO B, and CDO B owns bits of CDO C, and then they both go inside CDO D.